Good afternoon, Mike here. Hope you're having a good Sunday. So it is Sunday the 5th of January 2020. On the request of Karl last night, he asked me to do a quick video on the trade in November that I lost money on. So the screen you were looking at now, this was a screen that I was looking at. It is silver. What had happened in November, I'd said to Ivy, look, you trade the live account we have. We just made 108% profit or more. So we're doing very well on it. And what I wanted to do, I'd said to Ivy, you focus on the gold. I want to try something else. So I was looking through different things. And I came to silver, and on the 12-hour chart. So this is the chart that you're looking at now. You're looking at the 12-hour. You can see this on the left here. And you can see that the actual Bollinger Band had been really pierced on the upside. And on the downside, there was this candle. You can just see the candle there. You can see this candle here. There was a rejection, and there was rejection on the 150. So the 150 had already been rejected. There'd already been this candle here with like a dojo. It had tried to go down, puncture the Bollinger Band. On the commodity channel index, you can see that divergence was coming in, but it had not quite went above the minus 100. So I, without checking any of the charts, without following the code, and because I had a lot going on because I was going to Africa, I thought, right, I'm going to place a long position. Because it pierced the Bollinger Band, the position of where it had pierced the Bollinger Band, if you look here, pierced the Bollinger Band and it went up. So naturally, I'd made the assumption it was going to go up, and because it was way over sold and there was divergence in, looking at one chart, I made the decision and I placed a long position. And not long after, you will see this happened. And the mistake that I made, as I didn't check the other charts, which I wish I had now. So the good thing is, you can see what happened here. This orange line represents when I placed the long position, the buy position. And if you look at it across here, you can see where I eventually closed it. Now I won't go into why I closed it now. What I want to do is just show you why I realized I'd made a mistake. So I went on to the 4-hour chart, and on the 4-hour chart we need to trace where I bought it, and it was here. So on the 4-hour chart, price had not closed above the 8. Now on the commodity channel index, price was actually heading up to the 0. So you would have made assumptions, even if I had looked at that, that it was going to pass through the 0 and head to the 100. But it had not closed above the 8. So that was on the 4-hour chart. Then I looked at the hour chart. And let's go back to where it was. Apologize for all them cockerels. One day I'll be able to do a video for you without them. Right, you can see this is where I bought. So I bought, and again it was not above the 100. So there'd been a big rejection here, and it kind of just touched. That's all, just touched here. Then it came back down, and you had this candle here that I bought on. The reason why I would not have placed a position if I had looked at the hour chart, number one, it had not closed above the 8. Number 2, you can see by the Bollinger Band it was very, very narrow. So because it was very narrow, really it's not a good time to trade when it's narrow, because you don't know which way it could go. And in the very, very short trades, and short trades are riskier trades. So I wish I'd seen that. If I had seen that, I would have probably been more inclined to either place a short, waiting to see what was going to happen here, or wait to see whether the price had went above the 50. Because if it had went above the 50, then it would have increased. But instead, you can see what happened, just plummeted. So what I did very quickly, I drew, I think I was on the weekly chart, I drew this trend line. I think it was the daily chart. I drew the trend line. So this was back in November. So in November, I kind of thought, okay, let's draw a trend line, see where price will stop. So this trend line here, I noticed that it'd been a resistance and it became a support. It was resistance and it broke through, went up. Then it became a support. So I thought, well, that's going to be quite a strong support. So what I wanted to do was see where the price would stop there. So on the daily chart, you can see this is where I'd bought it up here, and the price had dropped. These are where it was bouncing off. This was becoming a resistance, and when it went up, I had a feel it would come back down and touch the resistance again. Then I had a stronger feeling it would start to go up. But by this time, I think 3-4 weeks had passed. So if you look from where I actually bought it here and to where I closed it, period 26 days had gone by. And our swap was quite high. It was getting quite high in the position. Ivy was stressed and she was wondering, oh, is it ever going to shoot back up? And for some reason, it was taking too long. It was taking too long to go up. You can see here there was like a big dojo here, and it went up. And in the end, I just thought the swap was just going to go higher and higher and higher. I'm just going to close it. And I did. And I still do not have any regrets of closing it, even though I knew eventually the price would go up. And as you can see, the price has shot up. It shot up all the way up to here. So if I had just been patient a bit longer, another 13 days, it would have went up 119 pips. But never mind, this is trading. The way I look at it, it's my only loss in, I think, 2-3 years or something. So I'm not going to complain at all. It was a judgment that I made. We had made a load of profit, so I lost a little bit of profit. I was not bothered. And we still had a lot of profit above our initial money we put into the live account. I think it was over 65-70% still left there. So I wasn't bothered about losing a little bit of money. But what it did make me realize is I need to stick to the code. Even if I'm in a hurry, just don't trade. If I have not got time to stick to the code, do not trade. So that is what's happened, and that is the lesson that I learned. And all the best lessons are learned by the mistakes that you make. What you must always do, if you enter a bad trade, analyze where you went wrong. Look for where you went wrong. So straight away, I analyzed, took a look, and on the hour chart, it was just in a too narrow of a Bollinger Band. Had not passed above the 8. Hold on, we're getting there. I should have it would be easier just to scan out. So yeah, you can see here, it had not passed above the 8. Bollinger Band is too narrow. It's not a good trading session, that. So really, in hindsight, I should have waited for it to close above, or I would have realized it was going to drop. I'd have realized it was maybe going to struggle. But never mind. These things happen. What doesn't kill you makes you stronger. I hope you found that useful. If you would like me, I know in the masterclass, I know I put in the masterclass presentation Ivy's trade from February that we left open for 3 months. If you'd like me to do a video on that one, let me know. Any other videos, again, let me know. I'll be more than happy to do them. The next one, I will talk about what I do for risk management. So I'll upload this now, and I will catch you on the next video. Bye for now.